Thank you, Lat, for the introduction. First, we're going to start with what does Risk Profile do? Risk Profile is a tool that's available in Tealstreet. It is in the trade settings gear. If you go down to visibility and then Risk Profile Beta, that's where you can turn it on. So that opens this component down the bottom right. What does the Risk Profile do? Risk Profile is a tool that estimates your profit, loss, margin, and balance based on your orders, positions, and price. It's like a heads-up display for your trade idea. If you are a retail trader, you don't have access to a risk manager, so you have to be your own risk manager. This tool is what does that for you. It simply tells you what is going to happen to your account if the price goes up or if the price goes down. It doesn't tell you how to trade, but it'll help you manage your trade and risk very effectively. As you can see, there's a lot of different pieces to this. So we're going to go through them one at a time. First, we're going to go through the global toggles. There's dynamic and static risk. This is a kind of a generalized definition that's not specific to risk profile. All it implies is that dynamic risk means that your P&L is based on the last price. And we're going to look at the moves here. There are a lot of different pieces to the risk profile, but we're going to go through all of the settings and all of the toggles one at a time. So first, there are two modes to the risk profile. One is dynamic mode and one is static mode. And these are generalized terms when defining risk. All it means is that dynamic mode is that the P&L shown is based off of the last price, which last price is always the diamond.
By 17.86.
Damn it. Bookmap is fucking on too. There are many different pieces of risk profile. We're going to go through them one at a time, starting with the global, dynamic, and static settings. So dynamic risk and static risk are general definitions when it comes to defining your trade risk. All it means is that when under dynamic mode, the P&L is calculated based on last price, and the center diamond, which is down in these rows at the bottom, is the last price. The default mode, dynamic mode, is the default mode when you have no position open, because you can't, you'll see in a moment. Oh man, I hate doing these recordings. There are many different components to the risk profile. We're going to start with the two different modes up here at the top toggles. There's dynamic mode and static mode, and these are generalized terms when defining risk. So under dynamic mode, it means that your P&L is calculated based on the last price. Under static mode, it means that your P&L is based on the entry price. The last price is always the diamond. Okay, that was kind of a good chunk. The reason you would want to see your P&L calculated based on static price is because you want to see the P&L as is normally shown in a trading terminal. If you want to see the P&L based on dynamic, it means that you show the P&L based on what you have on the table right now. So when you have a trade open, you have profit or loss. It's always understood that this belongs to you at this exact moment. So for instance, an example, if you are up $10 from your entry, that is great. But if you let it go back to your entry from the current price, you will be down $10 because you had $10 on the table that belonged to you, and all you had to do was take it. The first position we're going to go through is the risk move section. So this tool simply tells you what's going to happen to your position as the price goes up and as the price goes down. So we're going to start with dynamic mode here and use it as an example. So throughout the entire risk profile, the diamond is where the last price is, and we're in dynamic mode. So that means my P&L is based on the last price. So if price moves up 1%, as you can see indicated by the blue triangle, 1%, this will be the price, 45,136, and your P&L from dynamic mode, which is mean from your P&L at this moment, will go up $138. If you continue across, that means your margin balance will be 75.38 and up 1.87%. Now, since in dynamic mode, P&L is based on last price and not your entry, if I were to let this entire position, which is doing pretty good right now, go back to my entry, it's not like you would normally think, like, if you're looking at the terminal, your P&L would be zero and you would just say, I wouldn't make any money on this. Well, in reality, you actually lose $350 on this position, because the fact you didn't take the money off the table and it retraces your entry, you lose the P&L that you had. And that would also be a 5% loss on your current balance. Now, if you want to look at things the normal way, you could use static mode. And I like to use static mode as well because it tells how far my trade is into my trade idea. So you can see now under moves, the current entry is in the middle, and static mode does not work unless you have a position open. So if looking up at my last price, which is 2.5% above my entry, it shows up $350 instead of down $350, because this is what the terminal would normally show. If you look down, you can see your expected losses at each percent tier. And this will be all customizable to change these percents in a way you want to see them. So if we go all the way down to a 5%, and this is cumulative, this is not each step, you will lose at 5% $755. So if price were to go retrace to my entry and then go down 5% from there, the total loss will be $755, or a 10% hit on this balance. And let's quickly just go through the headers. The percent is the percent move. The price is the price at this percent. Event is what happens at this percent. Unrealized P&L is your P&L you have not taken at this point. Margin total, sigma means total, is the total balance you would have at this point. And the percent change is the percent change from the beginning. All right, next, this is where it gets a little bit more interesting. We will go and look at the risk spread, and this is a very, very powerful tool. It can estimate your profit, margin, balance, size, leverage, entry, and average entry based on your active position, resting orders, resting stops, and price direction. It shows you what would happen if price went up or if price went down. It doesn't do both. So last price in this case, if we were trying to figure out what was happening when price was going up or price was going down, you have to look at the last price. So it's only unidirectional. So what happens on the way down has nothing to do with what happens on the way up. So I'm going to just put a take profit, and I would love for it to get hit, but for the sake of the example, I don't want it to get hit. And we will start here, but I'm going to first go through the header definitions. So the dynamic and static toggle works exactly the same. Price direction is the direction in which price is moving from the last price, diamond in the middle. You can see this is up, blue arrow, and this is down, red arrow. The event. The event is very important to understanding this. What it does is it takes your resting orders and your position and your stops and your entry and basically calculates everything that happens at those points from the current price. So if price is moving upward, it will calculate and figure out, is this a take profit? Is this adding to a position? Is this a stop? And it'll show how it affects your account if those things were to get hit in that direction. The order size, so if it is an order, it will show the order size, and then right after it, you can see the position size. So the order size happens, and then the position size is the result at that order. Average entry is your entry averaged based on the orders being hit in this direction. The leverage here is the estimated leverage that you will be if that order fills. And this is based on the current market only. Now let's move into the data points that calculate your profitability, losses, money on the table, things like that. So the unrealized P&L is the P&L that you have available at this point. So if, for example, if we'll just look at the current long entry under dynamic mode, and since P&L is based on the last price in dynamic mode, we could see if it were to retrace downward back to my entry, which is 2.4% down from last price, my P&L will go down $343. And this is all at each of these rows is for each of these events. This is what would happen if all of them got hit, and it dynamically updates as you add or you remove orders from the chart, or they fill. So realized P&L is the P&L you would realize at this point. The total is when going in this direction, it adds up the sum of P&L, so you can calculate both profits and losses together, realized. And then P&L is just total realized P&L plus unrealized P&L. And just like in the move section, if you move beyond the P&L here, your margin is calculated based on your balance plus your unrealized P&L. The change is how your margin is affected by this event. And the total change is the entire margin change in this direction from last price to the top or last price to the bottom. And you can go for the same with balance, and the only difference is balance is calculated based on realized P&L. And instead of like your margin, where if you don't take it, it just shows what your margin balance would be. This only shows if you take profits or if you take losses, but it's the same effect. This would be your balance if price went up all the way to the top, all the way to the down, the change at each event, and then the total change. I'm going to make this a little bigger. Okay, we are going to go through an example here, and this is a position that's currently open. We will just walk through it in dynamic mode and static mode and then affect the chart and see how it plays out. And I will try to go slow. I promise this might look complicated at first. A lot of it you don't really have to use or look at. Eventually we'll have a way to hide columns, but this is very powerful for basically customizing and styling and designing your trade and being able to see the results before they happen if price were to go up or if price were to go down. So let's just start with static mode, and we still have the same trade open, obviously. And because static mode is based on your entry, we're going to be looking at this in the way that usually the exchange terminal show your P&L. So diamond in the middle at last price, it knows that because the price is active right now, the position is active. The average entry is 43,590, and you can confirm this on the chart up at the top. And therefore, since the P&L is based on the entry, at this price, my unrealized P&L is $345. And the total P&L, because I haven't realized anything here, is $344 as well. So let's say what would happen if price were to move down, and how could you use this tool to manage this particular trade? So if price were to go down from this point, hold on one sec. Fuck. Then you could see that first, it will return to your entry, and your P&L will be 0 again. And your entry is 43,590. So we're going from the last price to the entry, and the P&L becomes 0 because you let your money all retrace against you. Your margin will go down 4.76%. So essentially, you had a 5% boost on your balance. And then Next, it would go to your stop. So we went from last price down to entry, down to stop. So since this is a, we're going to reduce only on here. Your stop is 7% away from your entry. And you will realize at this point, as price goes down, a loss on your balance is $111. And as you can see, it adds your total and your total P&L. Your margin will go down an additional 1.59% from last price for a total missed value of letting this trade go from here to here, entry last price to stop. You will miss 6.5% of your balance. And now in the balance section, you can see balance only changes based on realizing losses, while your balance will go down 1.5%. The possible balance based on your margin, unrealized P&L, will go down to 6.5%. So this is a very good example of why you would look at something dynamically and why you would look at something statically. So, since dynamic is based on last price and static is based on entry, we can calculate the R of this trade. So all R is a standard measurement of risk. It is potential win divided by potential loss. So if you have a potential to win $300 and a potential to lose $100, that is a 3R trade. So for example, if you were looking at your position based on static R, it is based on your entry. So in your mind, you would look at this and you would say, this is great. At my entry, from my entry, I would lose $112, but if it were to go all the way to the top, I would gain $581 because that's where my take profit is. That was what would happen if it went from here, the current long entry under static mode, all the way up to the top. And I need to not fill here. So under dynamic mode, so you would say, okay, in your mind, that's great. You take 672 divided by 112, and it's about a 6R trade. And you're like, wow, that's fantastic. But if you go to dynamic mode, this looks very different. Yeah, there's money on the table and you're not taking it. From last price up until the top is a $200 additional profit. But from last price all the way to your stop, it's a $600 loss. So therefore, if you were to let this position retrace because you wanted an extra $140, you are essentially taking approximately a 0.2R trade. Your trade went from 6R to 0.2R. And that's not very good. You basically are giving up $665 to gain an additional $280. That's why it looks very different when you look at it these ways. You are not giving up $113 to gain $842. You in reality are giving up $335 to giving up $640, I apologize, to gain $316. Okay. So now you can see as a simple example from the last price, remember in spread mode, I'm going to take a sip of coffee here. We're in the spread mode tab, and all it tells you simply is, based on your resting orders and position, elements, and events on the chart, what will happen if price goes up and what will happen if price goes down. Or, not and. So it will say, if price goes up, this will happen, or if price goes down, this will happen. So let's add an additional element to this, just to give a quick run through. Let's just say I wanted to add to this position. Let's say I wanted to add to it in profit. And we will go under dynamic mode. So the risk profile understands this. It sees this new buy order, and it understands that it's going to add this to your long. So we're going to walk down, as you should, from the diamond again. This is the last price. So as price from the last goes down, it will hit this buy order of 14,000 contracts right here at the chart. And from there on, it'll make your position size 28,000 when originally it was 14,000, as you can see in the position panel. So by the time it gets down this order, you'll have a 28,000 position. Your effective leverage will be 3.75%. And the P&L from last price to this add, you're going to lose $169 of P&L. And you can also just still see along the way how this affects your margin, or how it affects your balance. And I'm going to say I think this is pretty straightforward on the margin and the balance parts, because you can see the calculations if you hover the headers. So I'm just going to continue to how the orders on the chart and how the P&L is affected. So okay, now we have a larger position. We're adding to it, and our entry before was 45204. Oh, I'm sorry. That's on dynamic mode. Our entry, we can go to static mode to see this. So our entry before was 44135, is because your entry on dynamic mode is last price. But your entry here on static mode is your entry that is shown on the exchange panel as it's shown down here. So if you wanted to see how your entry was affected, you want to go to static mode. Your actual entry, not the dynamic entry, which is last price. So we're adding to our position. Our entry was originally 43590, which is pretty good. That's all the way down here. But since we're adding all the way up at the top, our entry is going to get averaged out to 44,135. So about here in the middle, which makes sense, that is where your average entry is going to be, based on this order getting filled and your current long. And you can see that now we're in static mode. You would still have P&L, but it's based on your entry. Okay, moving further down, you would have your current long entry, which changes, and it'll be all the way down at. So this is because, okay, this is where it's a little bit confusing. Since this long is still your long and that order has not been filled, your average entry, you can still be seen on 43,590 in the price direction section. While it knows that it will be updated if this order hits the 44,135 entry, for now it is still at this 43,590. So basically, it's a good way of understanding that adding to this position will now make this entry an actual underwater point. So when it gets from here, adding, and then it'll eventually have an average point. And then when it gets to this price on the left, this is always what you need to be looking at as far as what's reality is these prices on the left. It will say, well, your old entry will now be underwater $356 if it gets there. And then moving to the bottom, you have a stop loss, as you should. And that stop loss is 1% below your entry here at 43,156. Your entry as it exists right now. This shows what your entry will be. This shows the entry right now. Price direction is right now. Average entry is the calculated entry. And you will realize a loss of $645 at your stop, which is about a 14% hit on margin because of unrealized P&L and a 9% hit on your balance. Okay, and we just got filled. So now you can see my new average entry because of fees is now 44,128. And it's a good point to stop here and say, The average entry is a little bit lower because this does not yet take into account fees, and Bybit has a maker rebate. Therefore, my entry was a little better because I also got a maker rebate on top of it. So now my current long entry is 44,128, and you can see everything moved up. The loss is still about the same because it still calculates what happens from last price down. It knew that order would get filled. It knew what would happen if it got filled, and all the way down to the point of your last price or your stop at the bottom here. So let's get a little more fancy here. It doesn't just do that, but the basics we've done is from last price down, what happens to the buy orders down to my stop, a very traditional and normal trade, and what would happen if it went all the way up to the top to my sell order. So now the risk profile spread is a little bit more complicated. I wouldn't say complicated. It's a little more intricate or powerful than that. It's like I said, it knows what happens as the price goes down on your orders and the price goes up on your orders. So since this stop would close my position, and I put another buy down here, and I put another stop down here, it would know that it would go down from the last price to my current long entry to my existing stop and close my position. Now it would go down further and create a new long based on this order, just as it would in reality here. So we're going from the last price to my entry to my stop and closing my position. And now if it hits this buy order at 42,554, it will open up a new long. And if that new long gets stopped out, you will lose an additional realized 182.97. Let's do this in the up direction. You want to get fancy, right? Let's complete our take profits. So as you can see, you could scale orders from the diamond up and close your position and see your total realized P&L. And you can say, wow, I'm feeling pretty good. I'm a pretty good trader here. I think I'm going to try to get a short in right after. So like it says, it knows exactly what's happening. You could put a limit sell up there. And I'm on reduce mode. I will put a limit sell on there. And now it will open a new short position. So at 47,604, after the last price, goes up and takes profit 1, goes up and takes profit 2. You've got some money in the bank, and now you're going to short. It knows this is the P&L you've gotten up until this point, and that you will be entering a new short of 14,000 at this average entry of 47,604. Now, let's just stop it. And it's going to do the math all the way up from last price. So now your short gets closed. You realize a $400 loss because you went from long to flat to short to stopped and flat again. You get a $400 loss. And then the total P&L up to this point is $844. So from the beginning into the top, that would be your P&L. You'd still make $800, even though you lost $400 on this short attempt. All right, I think that's pretty good so far. That's not too bad, right? Yeah, it's a recording, Zalem. I either could have kept the screen on or off. I'm using Streamlabs to record it. Now I just need to do some sort of outro. Is there anything you guys thought I left unclear? I mean, in general, like if you're watching this and you do want to learn it, I do want to teach you. This is so powerful. And it's not as complicated as it looks. It just simply says what happens when price goes up, what happens when price goes down. That's all you got to think about it. So there you have it. Simply, what the risk profile does is gives you an estimate based on what happens if price goes up or if price goes down. It doesn't tell you how to trade, but it does tell you the P&L and the balance effects of the trade and your trade idea and your orders on the chart. So you can design a trade, make sure you accept the loss, maybe reduce size if you don't feel conviction, maybe add size if you do feel a lot of conviction, and manage your position yourself. So large firms, they have a risk manager and they're using tools that are aggregating your trades if you're a trader, an institutional trader, and they're managing your risk for you. Well, if you're retail, you don't have a risk manager, so you have to be your own risk manager. And this is a tool that's basically your risk manager. Tells you where the bad stuff would happen, tells you where the good stuff would happen, so you don't have to do the math in your head and you can accept all of the risk that comes with trading. That's all for now. Please check out Tealstreet at tealstreet.io. If you're looking for more information on risk profile, you can go to docs.tealstreet.io, and there's a little more detail on the math of these columns and what happens at each of these points. That's all for now. This is Fragwar. Happy trading.